Good morning. This is Ron Brown. It's October 22nd, 2022, Saturday morning. I'm going to review the market, and I haven't done this. You're going to do it right along with me using HGSI software. Okay, standard risk disclaimer. Any stock index or ETF mentioned in this presentation is not a recommendation to buy or sell. All trading strategies are used at your own risk. If you do not have HGSI, you should take the trial and you should learn how to use it. I put out a new series of videos this morning to help you get started, and I'll try to remember to post that link along with this video. Well, this past week seemed like it was a very tough week, but in retrospect, as I look at this and look at the actual numbers, it isn't so bad. Here's the chart I put out every day on Twitter, Facebook group, and the regular bulletin board. And you can see that it was a frustrating week just looking at the individual charts. Here's the open, or the close last Friday. Here's the open on Monday. Big gap up, selling into it. There were 3 days of distribution here, and then yesterday there was a strong market day. Now the volume was only moderate. What I've done is I've added the percentage price change 5 days, which means from Friday's close to Friday's close, and that's right here, percentage 5-day change, 5.2%. I also put that column here in the warehouse views. If you install the new add-on, it'll contain this. So I have percentage price change 1 day. I'm going to change something. Hang on. I moved the percentage price change 5 days next to the beginning of the week in 1 day and moved the percent range over. This makes more sense. So you can see 1 day, beginning of the week, 5 day, and since the beginning of the year. So now we know the percentage price change 1 day. This is from Monday morning's open. The percentage price change beginning of the week. Percentage price change 5 days is from Friday's close, and then of course beginning of the year. So you can see the stocks had a very good week, up 8.1% from Monday morning's open. It was up 4.6%. But let me concentrate on the NASDAQ for right now. You can see yesterday it was up 2.3, 2.7 since the beginning of the week. Not a big gain there, but since last Friday's close, up 5.2%, and that's what is reflected down here now in this warehouse view, or warehouse field, I should say. So here's the daily chart. Here's the weekly chart. You can see the big gap up from last Friday's close. This now has generated a strength seen returning after a downtrend VPA flag. Also on this weekly chart, you can see that it's above support. I considered this critical support back here. This low, it blew down through it. Now maybe we're getting a spring off of this, and we could go higher. Volume this week, if you look at the volume bar down here, was higher than the last several weeks. In fact, if I put a crosshair on here, you can see it's higher than the prior 4 weeks. Not as high as this one where there was a major sell-off on that. So this is good. Every day the volume has seemed weak, less than average, but when it's put into a weekly chart, it looks a lot better. So that's why we should always look at both daily and weekly charts together. So here we are, advancers versus decliners. We're about, I'll do an alternate eye. Bring this up. It was only, let me put this up here so we can see it better. And click on the last day. Advancers were a little more than 2-to-1 positive, and a lot of new lows compared to the new highs, but I'm encouraged by this weekly chart over here. So let's hope we have a good week next week. Now let's dig a little further into the NASDAQ. I'm going to look at the new highs versus the new lows. Let's just make this full screen. You can see the new lows compared to the new highs. This is not good, but we are a long way from these new lows over here compared to the new highs, or this one, or this one, or even this one. So that's encouraging, even though the new highs are clear down here. Now, one more chart on the NASDAQ. This is the advanced decline line, and you can see that it's now bouncing along the bottom. In fact, it has a higher low here than here. Now, if the market can rally next week and take out this high point, this would be the higher low, and this would be a higher high right in here. You can analyze this AD line just like you can a chart down here. So there are some encouraging signs here. Now up here, the accumulation distribution has gone from E to D. This is really a lagging indicator over time. It takes a little time for that to adjust. So not much there. Let's take a quick look down here at Ian's multiple indicator chart. We have a kahuna. Yesterday we had a kahuna back here, which means a big move up in the Bollinger Bands, but there's no eureka, which would be a really strong move with heavy volume. It just hasn't happened yet. So that's the NASDAQ. Before I leave here, let's take a look at this. Sorting on the percentage price change 5-day, I said the SOX had a big week. The NASDAQ 100 had a big week. The composite 5.2, that's really good. The transports were up 1.5 from last Friday's close. So everything was positive. And if we look at it this way using HGSI, the market looks better, looks a lot better to me. I'm not going to get overly optimistic, but I'm seeing signs of improvement. I'm going to switch charts here. Let's just go to a standard daily analysis chart, end of day. I'll use the one with the end of day statistics. Take the crosshair off for now. As you can see, the volume was light Friday and Thursday. Remember, the volume was up here, but when we look at it this way, these were negative volume days here, these two, these three, but when you look at the weekly volume, it's a green bar because it's positive. So just trying to digest all this. Put the crosshair back on. On this is interesting. Big up day here, and that was last Thursday, I believe, and then on Friday, even though this is a really ugly candle, look how light the selling volume was compared to the buying volume on this day. And then here, green bar, light volume, but these during the week, I said these were distribution days, and you can see that it gapped open to the high, closed mid-range, but volume was heavy. Spinning top with heavy volume. Semi-distribution day. Thursday was a distribution day, but on lighter volume because it opened here, traded up to here, closed here. Has to be distribution. But on Friday, this was a accumulation day, even though the volume was light. I would have liked to have seen heavier volume. But these volume bars here combined give us a green volume bar over here. So there was activity, but looking at the weekly chart, you can see that a lot of that activity was selling volume. This is why I can't get too optimistic, but let's hope better times are ahead. Okay, I'm going to drop down here. Spider sector ETFs, I'm going to change my view. And scorecard end of day, I went ahead and put that percent price change column in here also on the warehouse views. I just uploaded these views, so if you downloaded the views early today, update them again. Now let's look over here. Percentage price change 5 days. Energy sector was strong. Tech sector was strong. These are really good numbers for the week. And from the beginning of the week, or Monday morning's open. So I'm seeing strength here. Percent volume to the 90-day. This was yesterday. So strong volume days on these sectors. Let's look at the energy sector. You can see the volume down here didn't get up to the 90, but we have an effort to rise, a bullish sign, effort to rise back here. This is the daily chart. Weekly chart is not showing efforts to rise this week. Now, this sector, the volume, you can see, was lighter for the week. Let's go down to the tech sector, which has really been beaten down. Good volume yesterday. Didn't get a VPA flag, kind of surprising, but that is a strong white candle. This was a bullish sign. You can see, well, I take that back. It opened here, traded up here, and then closed mid-range. So a couple of distribution days. Really frustrating for those who bought tech first thing, and then by the end of the day, if they held, got stopped out. But yesterday looks much better on heavier volume. You can see the volume here, 50 above the 50 and 90-day 13.6% above normal and 12.1%. But on the 20-day average, under a little bit. But you can see strong in all these sectors. I'm going to drop down to, or I'm looking for my industries. There it is. So I have to drop down here to percentage price change on the indexes, and I'm still sorted on the percentage price change for 5 days, but you can see that the 1 day was good, 4.8, 11.8 on the beginning of the week, 15.14 since last Friday. So that would be Friday's close. Here is where this oil and gas services index ended up. Very strong week. Cruise lines, strong. Let me get that out of the way. 14.5%. I'm going to just go top down here. Let's see where the big movers were. Lindblad was up 25% for the week. Still a beaten down stock, but up from this low to here, that's a 25% gain. Trends on the weekly trend is clearly still down. Put an arrow on here and you can see that I need to make that red though, don't I? Clearly a downtrend, but there's bottom fishers in these groups. And I don't know why, but looking for a bargain. The revenue has really fallen off. But the point is, there is buying in these groups. I'm going to make this full screen. Sorted on percentage price change, 5 days. What else? Chemical distribution, base metals, environmental engineering, steel producers. Steel stocks were strong yesterday. They were coming up in my group inclusion report and my intraday scans, and those are things that I'll talk about. What I'm doing, or what we're doing, is holding what George is calling office hour talks every 2 weeks on Thursday afternoon from 2 to approximately 3, whatever I have time to devote to it. And we're talking about different things for HGSI. And the sessions are open for everyone. You have to have my Insider Club files to really benefit from everything I will show you, but you're all welcome, and you can learn all this stuff in more depth. What I'm doing, rather than trying to cover the whole subject of HGSI, is I'm concentrating on specific aspects of the program. Now, last week, yesterday, or Thursday, I did devoted that exclusively to the group inclusion report, and it turned out quite well. Anyway, this you can see the steel producers were up big. What happened yesterday? I'm not familiar with this one, but Nucor was really strong. Let's bring Nucor up. You can see this, the gap open, slight gap open, but look at the weekly chart here. Big moves up in steel. Now here's the daily chart. Look at this, has been under accumulation from back at the 103 level, and we're up at the 137 level now. I'm sorry, 135.56 level it says. Okay, I want to do one more thing and then I'm going to end this. I hate to listen to long weekend reports, so I'm going to try to keep this short. Okay, I'm going to go into my HGSI major indexes only, and I'll click through to the warehouse view, and I can just use this, and let's take a look at the broadest part of the market, 1500, which includes the 600, the 400, and the 500, and let's see how this looks. And I'm going to go into my HGSI index charts, and let's look at the percent above the 20, 30, 50, and 200-day moving averages, and you can see that the S&P 1500, this has been moving up since back here, and what is this date? That's 10/3. It shot up and then pulled back, but you can see there's a series of higher lows and higher highs on this. There was a pullback. This is a higher low than this, though, so that's looking good. This is a percentage of the stocks within the S&P 1500 that are above their 20-day moving average. This is above the 30-day moving average. This is above the 50, and this is above the 200. So this one's still lagging, but you can see there is momentum building as it goes up. These are the Bollinger Bands. It's at the top of the Bollinger Bands right now. Now, if you want to know the actual percentages, just do an alternate I. Make sure you click on the last day, and it tells you the percentage above it's the blue area, 67.75%, or above the 20-day. Now, if I go back here, click on this area over here on the right, on that day, 10.83% were above their 20-day moving average. And if I go to the last day, look how much this has improved. So these are other good signs. I'm much more optimistic after looking at it, taking an in-depth look at the market rather than just looking at the composite. I do the composite every day because that's the index that I've been following for 30 years, but I need to go more in depth, and you should go more in depth when you do your own analysis. Now, this is a chart I've had for a long time. If you get all these green bars together, that's a buy signal. More than 5-to-1 advancers over decliners, more than 5-to-1 advancers versus advancing volume versus declining volume. Now, remember, on the NASDAQ, it was only 2-to-1. But here it's at least 5-to-1 on the advancers versus the decliners. This is the Force Index 13-day average, 2-day average. The VPOC 1010 went positive, so we get a dark green bar. We had one here too, and then we had a failure. This one is also a buy signal, just not quite as strong, but this is a strong buy signal based upon this, and there's a pocket pivot here. Now I want to do one more chart here, and then I'm going to end it. That's not what I'm looking for. Here's what I'm looking for. This is index internals, and if you look at this, it gives you all this information about whatever index you're looking at. You can see percent advantage, 90.78, percent declining, 9.08, advancers, 1309, decliners, 131. I don't have unchanged in here. But there were 1,178 more advancers than decliners for a 9.99 to 1. Volume was 6.54 to 1, so you can see why those signals generated in the prior chart. Now, ARMS index, I just don't, I've lost all, I don't understand that anymore. It should be under 1 with this kind of a big move up, so I just really pretty much have quit using it. New 52-week lows, 146 52-week lows, 534 new 52-week highs, So anyway, I don't need to read all this. This is all pretty self-explanatory. But here are these numbers. You don't have to, the numbers that I just showed you in that chart, the percent above, you can just look here. Percent above 67, 54, 33, and so on. Accumulation numbers. A lot of information in this chart. So you can look at this to get a quick read on the percentages. But if you want to actually see the changes, you use this chart so you can read it. Anyway, I'm more optimistic than I was last week, obviously, so I'm going to leave it at that. And thanks for listening to this. If you're not an HGSI user, you should be, because you can see what the insight that I get from using this program that I really don't get from using any other software program. So I've quit using all other software programs except for HGSI and Thinkorswim. I occasionally do take a look at Amy Broker because I export the data from HGSI, and then I can use the drawing tools and so on Amy Broker. But other than that, I don't look at any other software. Thank you.